Hi guys, really glad you're tuning in with me today. Hope you're having a fantastic day wherever you are, and I'm super excited about today's topic. In today's video, I'll be sharing with you my exact strategy on how to take profit on my cryptocurrency investments during the next bull run. So if you've had a bad experience during the 2017 bull run where everything was going up and you didn't really sell, or you're just like wondering at what price should I sell Ethereum, or what price should I sell Bitcoin, or what price should I sell whatever project you invested in, well, this video is exactly for you. So I highly recommend that you watch till the end of the video, because I'll be showing you step by step my method, my strategy to make sure that I get as much profit out of my investments during the next bull run. My name is Kierin. I create DeFi and crypto videos to make sure that you are ready for the next bull run. Let's start with the Ethereum chart. I want to share with you like the typical investor strategy. Very often investors coming into the cryptocurrency space don't really have a strategy. Like without having a strategy, that's like going into a dark room without a flashlight. You'll never find the exit. So we've got the Ethereum chart in front of us, and let's imagine you're a smart investor during the 2017 bull run, and you've been buying ETH at different price points, like here, at an average price of $200 per coin. Now, what happens? Like you've bought, but you don't really have a strategy. Like this might be the hodl mindset, and the price of many different cryptocurrencies is going up. And like every day you've got 10% gains, 20% gains. I mean, the euphoria is just palpable. You don't really imagine that it's ever going to stop. And I think that was the general sentiment during the 2017 bull market. I remember everyone's thinking, oh man, it's going to go like 10x, 20x. It's just never going to stop. And that's typically what happens during a bull run. The greed comes out of people. People just like believe it's going to continue to rise. And yeah, but truth be told, what goes up has to come back down at some point. And the biggest problem with investing is the psychological aspect, the psychological warfare that will happen in your mind, the fear of missing out, the greed, and all that comes when you've got like massive gains. So right, so you didn't really have a strategy, and the price goes up to, in Ethereum's case, it would be like $1,200, and you don't really know if it's going to continue up. So you don't sell because you're scared that the price will go to 2,000, 3,000, 4,000, and you just miss out on all these potential profits. Now, what happens is the price goes down. It drops maybe like 10%, 20%, and you can't sell now as well because you just saw that the price was before at 1,200, and you believe that the price will go up again. And you're scared that if you sell now that you miss on all the future potential profits. But what actually happens, the price goes down again. It just goes down, it plummets until it reaches your initial investment average price of $200, and it might actually even go below. So now you definitely cannot sell because like your investment is actually even worth less than when you started investing. And that's basically this hodl mentality, and why many people during the 2017 bull run like suffered 70, 80, 90% loss because they never took any profits. And yeah, hopefully with this strategy you actually learn how to take profits. You won't be able to sell completely at the top, but you definitely have the maximum return on investment possible with the least risk and the least emotional, psychological thoughts involved holding you back from taking the max profit possible. All right, let's clear this. The basic gist of this strategy is by using the same dollar cost averaging method for buying, for selling. So the basic gist is that instead of just holding all the way, riding the whole wave, you'll be selling at small increments. But with this strategy, I'll show you also exactly how you can select these price points for the best selling opportunities. Now, the indicator that we'll be using is called the 2-year moving average multiplier. And if you go on to look into bitcoin.com/charts, and I'll link this down below so you can look at it, you find the Bitcoin Investor 2-year moving average multiplier. And it's actually really simple. It uses the 730-day, which is 2 years, moving average. That's the lower line, this one here. And it uses the 2-year moving average times 5. So if you would buy at this point and you'd sell at the line above, you'd have a 5x return on investment. And the general gist of this indicator is that when you buy below the line, this is a good buying opportunity, and then you're supposed to sell when the price goes above the line. And you repeat this for each time it goes below the line. So here you would be buying, here you would be selling, and that is what everyone is actually trying to do. Buy when the price is low and sell when the price is high. But very often what happens is the complete opposite because of the psychological warfare that happens in our minds. All right, so now we understood what this indicator is. But the only problem here with this website is it's only available for Bitcoin, and you might have many different other cryptocurrencies that you're invested in. You might have ETH, XRP, Litecoin, Monero, or whatever. And this strategy works actually for every investment that you've got. Now, before we continue with the exact strategy, I think there's one step that's super important, and that is defining what is the max price where you'd be comfortable to selling your whole position. And now this can be like a price that is super high. It can be high, but it has to be kind of realistic. And for me, I'll be using ETH again as an example. Go on to a coin tracking platform like CoinMarketCap, CoinCheckup, CoinPaprika, or so on. You've got your cryptocurrency that you're creating this strategy for. You take the price. You have to choose 3 things: the price, the market cap, the current market cap, or the market cap where you've of your average buying price, and the circulating supply. Take all these 3 things and put it into a spreadsheet. And for me, I believe in the next 10 years, it's possible that ETH reaches a market cap of $1 trillion. Now, I realize that this might seem super optimistic, but I think like in 10 years, 20 years, it's definitely possible. That's my opinion. You might have different numbers. All right, so let's say 1 trillion market cap. If ETH reaches a $1 trillion market cap, I'm happy with selling all my ETH. Point. That's it. I'm happy with a 45x return on investment, which is actually a phenomenal return on investment. And with a $1 trillion market cap, that would put ETH at a $9,000 price range, which is a very high price range. And at that price, I'd be happy selling all. All right, with these foundations put down, we can move on to the next step, and that is creating our strategy. But the problem that I mentioned before is that the Look Into Bitcoin website is only available for Bitcoin. This indicator is only available for Bitcoin. So for that reason, I recommend using TradingView. TradingView is a free charting platform. You can sign up using the link below. You go to tradingview.com. If you don't have an account already, it's free. And here in this, next to the ticker, you've got an input field, and you can put in the cryptocurrency pair that you want to create a strategy. So in my case, I'll be using ETH USD, but you can also use it for BTC USD. So you put this in, click on enter, and then below here you see a blue button that says full feature chart, and you click on that, and it will open up the chart. With the chart open, I've already got the indicator installed, but you probably won't have it installed. So what you want to click on is this little FX icon, and this is the indicators and strategies. And in the search field, you can write 2 - year MA, and it should pop up. And you can see here the 2-year moving average multiplier, and you click on it, it's from the DBOM. And when you click on this, it will be added to your chart. If you hover over this 2-year moving average indicator, you can see it here. You can turn it on or off, and you can also click on this to change different settings. You can change the colors, many different options that you can change if you're not happy with it. I'll just leave it how it is. All right. So the lower green line is the 2-year moving average, and the upper red line is the 2-year moving average times 5. Generally speaking, it would be good if you, like for me, I'll be buying when the price goes below the green line in this green shaded area. For me, that's the best buying opportunity. And the strategy I'm going to share, there's 2 different options, so like a lower risk option and a higher risk option. With the lower risk option, you'll be taking profit a lot sooner, but the total amount of profit you get out of it is going to be lower than with the higher risk option. With the higher risk option, you'll be taking profit a lot later, but it's possible that it will take a lot longer to actually get this profit because you're going to be taking it a lot later. And yeah, that's about it. So with the lower risk option, you'll be selling 50% of your investment between the green line and the red line. Now this 50% is arbitrary. I chose that. For me, you can also choose another number like 30% or 40% or 70%, how you want. Me personally, I'll be using 50%. I'll be selling 50% of my investment between this green line and this red line. And I'm gonna just choose arbitrary steps, probably spaced out equally. So you're gonna have 5 different places where I'll be selling, and I'll show you the exact numbers for this ETH example later on. And then afterwards, the remaining 50%, I'll be selling between the red line and my price that I selected previously. So for this ETH example, the max price where I'll be super glad to sell everything would be $9,000 US. So that would put it about here. So that means the remaining 50% I'll be selling at these intervals here, again in like 5 different intervals. And that is the lower risk version. For the higher risk version, basically, you only start selling from above this red line to the $9,000 US range. And then instead of just, before we had 5 intervals, here you're going to have maybe 10 intervals. So you're going to be selling a lot often, but at a much higher price, right? This is the higher risk version of the strategy, which generates a lot more profit. But as you can see, since it starts a lot later, it's possible that the price of ETH goes up a bit, goes down, and then goes above this line at a much later date. So it's possible that it goes higher and then goes lower. That's something you have to consider and be aware of. All right. So with all that said, I'll show you my different price levels where I'm selling ETH at, and we can do a little bit some calculations to see how much profit I would get. So in this example, I've got 10 ETH at $200 US per coin. That is an initial investment of $2,000 US. Pretty good. And I took some arbitrary price levels where I will sell 1 coin. Now you've got also 2 different options. You can either choose to always sell 1 coin per price level, or you can also choose to sell a fixed amount per price level. So you can always sell maybe $500 US per price level, and that means that the higher the price goes, the less coins you'll be selling. Or you can just say I'll be selling 1 coin per price level. In this example, it's going to be 1 coin per price level. So I'll be selling at 400, 600, 800, 1000 and 1200 when the price goes above. So what is possible that happens is the price goes up a bit, touches the first level, goes back down again and goes back up. But I've already sold here 400, it goes back down, it goes up, and it goes back up again, and so on. So it's possible that the price of ETH touches one of these levels, but since I've already pre-planned with this strategy where to sell, it doesn't really matter. I will be selling at these levels. So if I take the calculator, so I'm selling at 400. So I'll add all these amounts together, and that is 400 plus 600 plus 800 plus 1000 plus 1200 is 4000. So with this strategy at the red line, I have already sold 4,000 US dollars. That means with just selling in these 5 steps, I managed to get a 2x on my investment. Not only did I manage to remove my initial investment, I actually doubled my money, and I'm still 50% in the game, which is fantastic. And after this red line, I'll be continuing to sell when the price goes up. So I'll be selling at levels such as $2,000, $4,000, $6,000, 8,000, and 9,500. And each of these represents a price level that ETH might reach in the future. So now if we continue adding up the profits, so the initial 50% is 4,000 US dollars. And then afterwards, let's count that up together. So 2,000 plus 4,000 plus 6,000 plus 8,000 plus 9,500. All right, so that means the remaining 50% is a 29,500 US dollars of profit. And that is pure profit because we already removed twice the amount of our initial investment. And then if we add the plus 4,000 the initial, that means we've got a total of 33,500. And if we divide that by 2,000, that means we've got a 16, if we round it up, it's a 17x return on investment, which is just, I mean, many people just can't dream of that much money, like that much return on investment. It's definitely a very high amount of money that you can generate with this strategy. Now, of course, it doesn't mean that the price will definitely hit. It doesn't mean that the price will definitely hit these levels up here, but if the price goes higher and it might reach $6,000 and then it goes back down again, you've at least got a decent chunk of money, a decent chunk of profit out of the market, and you won't be relying on emotions, on the psychological warfare that might be raging in your mind, thinking, oh yeah, but the price might go even higher if I sell. So with this strategy, you definitely manage to profit during the next bull run, and you won't be hodling all the way through and riding the roller coaster up and all the way back down again. So with this strategy, you definitely make some profits during the next bull run. So that was today's video. I hope you enjoyed it. I'll link all the important stuff down below. If you found this video valuable, then I appreciate a thumbs up. And I'll catch you on the next video. Have a good one. See you soon. Bye-bye.